All right, guys, welcome back again. Still your boy, the Legend FS Academy. And in this video, I will be walking you through a very simple entry strategy that a day trader can use and a swing trader can use. If you're a day trader, you can use this particular entry strategy that I'm about to share with you. And if you're also a swing trader, you can use it. Both of them can use it. And if you're also a scalper, you can also use it. But I will be focusing more on day trading and swing trading. So as you all know, my name is Legend FS Academy. And before we proceed, please, if you like, if you like this video, please always give me a thumbs up. And if you don't also like it, also give me a like as we proceed. So first and foremost, I have this principle here that I've outlined here that I always use whenever I'm trading. This particular strategy I'm about to share with you. This is what I'm always using to trade this particular strategy. So and I'm about to share it with you guys. So please follow me as we move on. First and foremost, in this particular strategy, you need to identify. Number one is for you to identify the direction of the market, in the sense that you don't want to know whether are we in an uptrend or are we in a downtrend. Those are the key major things you want to first identify first. If you are in the uptrend, then you need to buy, and if you're in a downtrend, then you need to sell. So that is the number one thing here. You need to look at for first the direction of the market is very, very important. The direction of the market, if you miss it, everything is gone. So you need to be able to know the direction of the market and know when a particular trend is still intact and know when the particular trend has also been validated. If you don't know how to read market structure, I have a video on that on my YouTube channel. You can also go and watch it and know when a particular structure is still very much intact. That is number one. And the number two is the one I call the alignment of three time frame. What do I mean by this particular statement here? What I mean is that if I'm trading on a particular entry time frame, let's say I want to take a trade on the 1 hour. So what I need is that I need a daily 4 hours and 1 hour to align together before I will take a trade. So for example, if the market is going up on a daily, and I come to 4 hours and the 4 hours is coming down, and I come to 1 hour, 1 hour is going up. I won't that trade. All I'll be waiting for is for daily to be pointing up, 4 hours pointing up, and 1 hour pointing up. And that is a perfect time for me to take a buy or a sell. That is what I mean by allowing three time frame to align in the direction of the market you want to take. So that is number two. And the third one I have on my list there is what I call the pattern. So the pattern is you can say I say pattern for entry. For example, now let me take for example now. Assuming you are on a journey, you are taking a transit from one location to another location, and you don't really know where you are going, and you are alone inside the vehicle. What you have to do is that you want to deploy the help of Google Map. So because if you don't know where you are going, you have to deploy the help of Google Map. Google Map will be the one to be pointing to you. Follow left, follow right, follow this until you get to your destination. Same in trading also. If you don't know anything in trading, if you don't know anything in trading, or maybe let me not say that because before that you tell all these questions before you even talk about taking a buy or selling the market. So now, if the market is pulling back and is coming down, let's assume the market is coming down, So if the market wants to reverse, if the market wants to, if the market wants to start going up, then the market will give you a pattern, just like a Google map, to tell you that hey, I want to start going up. Those pattern is what I always analyze on to take a buy or sell. Because those chart pattern indicate to me and I want to go up or go down. And this chart pattern is always the F and W or head and shoulder or inverted head and shoulder. So that is what I call the chart pattern for entry. And the fourth one here on my list is what I call the time frame. So now, if you hear what when I introduced about this video, I said if you're a swing trader, this strategy can work for you. And if you're also a day trader, this strategy can work for you. Now, as a swing trader, you want to be focusing on daily 4 hours and 1 hour. This is not to say that this is your overall time frame. No, as a swing trader that I am, what I normally do is that I first go over to monthly to check my overall direction of the market. And once I've been able to get the overall direction of the market, the next thing I do is to head over to weekly to see that if you are having any pattern that is forming on weekly or anything or any kind of pattern. If I can have it, then fine. I will know the overall flow of the market. And when I scale down to my daily, what I'm waiting for in my daily, for daily to align with the weekly. and 4 hours to align with the daily, and 1 hour to align with the 4 hours. That is when I cannot take a buy. This time frame is the most important time frame in if you're a swing trader. These are the major time frame you need to be paying close attention to. Most especially this daily here, because the daily is the one that will show you what happened previous day and what happened and what will happen next. It will also show you this. So now for a day trader, you want to be paying close attention to 4 hours, 1 hour and 15 minutes for your entry. Why did I say so? Not neglecting the big boys time frame, which is the daily 4 hours, because if you're a day trader, ideally you want to be focusing more on daily. You don't have any business with monthly, but you can as well just check the overall because a day trader is someone who just want to get 50, 30, 40 pips in a day and get out of the market. But a swing trader is looking to catch the big move in the market. So they are different. They are looking at the market differently. So now you want to be capitalizing on 4 hours, 1 hour and 15 minutes, but you need to still check your overall big boy time frame. In this case, it should be daily or weekly. So now these are the major time frame that you can use as a swing or as a day trader. Hope you're following and you are getting it correctly. This video will be long, but I will try my best to make it fast. Well, okay. Now, the last one, the fifth one here is how to place stop loss and take profit correctly. So now I will also be showing you on how you can be able to place your stop loss and take profit correctly in this particular strategy that I'm about to review to you now. It's a very simple strategy that everyone is using. You may be using it also, but I refine it to suit my own pattern and my style of trading. So the last one is I call DC or 4HC. So if you watch my video, you must have been seeing this particular 4HC. What does this mean? This particular means that daily close, and or 4-hour close. So now for this particular strategy, for it to be more effective and for it to be more accurate, you need to wait for what I call a daily candle close if you want to take a swing. And if you're a day trader, you need to wait for 4-hour candle close. 4-hour candle close. It is very, very important. So you need to pay attention to daily 4-hour close. So now, as I will be showing you the example, I will be pointing all the whole tips you need to know, and I will be turning them together as we move on. First and foremost, I will be starting on with a sketch, and after that sketch, then I will go over to a plain chart to show you the strategy and how it works. But first, let me just start with a sketch first. First and foremost, let's assume that now we are having a direction like this. The market is going up. You open your chart and the market, you see that the market is making this kind of higher high, and you've been able to identify that hey, we are in a uptrend. Now let's assume that we are looking at this particular chart from a daily perspective. Now, from a daily perspective, now the market just moved like this, and you are waiting for this particular pullback to go long. Now, when the market gets here, let's say the market gets here, what I normally do is that, and what I taught some of my friends is, I always use this particular trick. When the market is here, then I will have to put that in my box, and I will on the daily zone, and I will box it. Once this particular daily zone close, if it close, if the market wants to continue coming down, the market will have to tell me that it wants to continue. But not if the market don't want to continue. On this particular daily close candle, it can be, or you can also do it on 4 hours. Look at what the price will do inside of here. The price will come like this, the price will come like this, give you this leg to the upside, reject, come back here. The price can play along, it can play around here, and the price will just come back again and reject inside this box. Let me take away this first. Inside this box, the moment the daily, note that when the daily candle close on a particular day, you have to box it. Are you getting my point? You have to box it to know if this market still has the ability or the capacity to continue going down. And if the market doesn't have the ability or the capacity to start going down, inside this box here, the market will, on daily, this is what you will see. The market will just look like this. Then once you've spotted something like this on daily, when you box it, And when you bust it like this, you have to now head over to your 4 hour, because it is on your 4 hour that you can be able to see this particular pattern clearly. Then when you head over to your 4 hour, inside this bus, let's assume that this market wants to continue heading lower. This market will just come and break this particular bus and start going down. But if this market wants to stop and wants to make another leg to the upside, just something like this, hmm, something like this, something like this, on daily, it will just show you a particular candle close like this. And maybe the candle will just close here. It will not show you a pattern on particular daily. It is when you now head over, it will just close as a bullish, maybe bullish engulfing. That is why I said you need to wait for a particular candle. This will just show you as a bullish engulfing candle, but it will not give you a chart pattern. So now sometimes you may be also be confused because the price is not balanced. Because I don't want to be buying when there's no sort of confirmation for me. So what I want to be doing is that the moment the daily close, I book it, then I head over to 4 hours to see if I can be able to see a chart pattern. Within that period that this is closing, and within the opening of a new candle, if another candle open like this on the second day, another candle open like this and moving. Let's believe, on 4 hours, this is what you see. This is what you see, because this candle will filter all the whole noise on 1 hour, on 2 hours, to make it concrete. And this candle will not, it will not just, it not like 4 hours, you have a lot of 4 hour candle to get a daily candle. So that is why on 4 hours, you will see something like this, a chart pattern. A chart pattern on this same bus here. This particular strategy, I've been using it since late last year, and it has been working for me like crazy. Like I've been having a win rate of, let's say, 60 to 70% with this particular strategy. So now, if you finally for this kind of pattern, what you have to do is that now you have to wait. Let me take this out and let me take it out. Let me just take it out and do another one. Let's assume that now you've spotted this particular pattern here. You spotted this particular pattern here. On daily, the market has closed on when you switch to 4 hour, 4 hour will be something like this. 4 hour can come like this, come like this. So you don't want to be entering buy, because now this thing can just be a continuation of the downtrend. The market can just come and close below here and start going down. You want to be buying at the second leg. Don't forget, not at the first leg. You don't want to buy here. You don't want to buy here. You don't want also to sell here, because market has not given you a clear direction. The market can just continue going down. And this must be happening, this particular scenario must happen on a particular, maybe on a resistance or in a key zone. That is where you will be looking at this particular pattern now for. So when this particular thing happens, so you want to be waiting. Don't buy on this first leg. Don't buy on this first leg. Don't buy on this first leg. Always wait. If the market can fail, see, if let's say this guy has a week here now, let's say the market closed here, but this guy has a week somewhere here now. Let's assume that this is for the first leg, let's assume that this is the week of the candle. So this second leg must not exceed this particular week here. It can just come and weak. It can come with a week, but not close below this particular here. That is when this particular pattern will be valid. So that is when this particular pattern will be valid. Whenever you kind of thing that you just want to wait for this second leg now to come up, you just want to wait for this second leg to come and close above this particular high here. So when this market close above this particular high here, if you are watching this particular distance from the 4 hour chart, when you switch to over to 1 hour, what you'll be seeing on 1 hour may look like this. Market pull up, pull down, pull up again, pull down, start doing something like this. The market will be giving what we call the inversor head and shoulder. Why? Because all this waiting here, all this chart pattern that this market is trying to form is trying to give room for the daily to close bullish, and for the 4 hour to also give you a concrete chart pattern. So that is why you will see on the 1 hour, the market will be looking like something like this. So, but if you know this here. How many this 4-hour candle close above this here? Because anything that made this particular high close, the market close this particular high here. That is a sign. That is a sign. The moment the market above this particular high here. So what I always do is that when this market close, if I'm to enter with 1% of my account, for example, what I always do is that I will have to come in with a 0.5%. I will enter with 0.5%. The close of here, stop loss will always come below here. See, your stop loss will be 1 pip away. Let's say this is the width of this particular candle here. The first leg or the second one, the stop loss will always come below it with maybe 2 pip below it or 3 pip below it. So this is exactly where your stop loss will always come below. Because why? If anything that makes this market comes and close here and later come back like this, this particular scenario now, it has invalidated the principle of this pattern, and this particular setup is no longer valid again. So you just want to get out of the market, because if you have something like this, this is not longer a chart pattern again, because the pattern has been invalidated. So now the way I do it is that once I enter with 0.5% of my note, I want to enter with one lot, so I have to divide it first. I will enter with 0.5%, and I will wait for what I call a pullback. The market can only go and come back for a retest. And if this retest is successful and it not go below double bottom here, this is where I will now initiate the second 0.5%. Now I will now be targeting significant high. Do you know why I always put best 0.5? Because sometimes you may see this particular pattern and the market will just rally without coming back for a retest. It always happens in the market. The market will just rally without coming back for a retest. So ideally, what I want to be doing is that enter with 0.5 first, and when the market come back for a retest, I will enter with 0. Remaining 0.5%. Was there what was time? Let's example, let me delete all this thing and do other thing. Let me delete all this one. Let me delete this one, delete this one, delete, so that it might start to clean. So let's assume that I'm working on this. Now let's assume that this is a market structure. This is a market structure that I'm looking at, and I've seen that the market has rallied up. So now when this market is coming back like this, when this market is coming back like this, and the market the daily has closed somewhere here, this is where I will now come and bust it. And the daily must close. Look, if you also for 4 hours, the 4 hours must also close. So once the 4 hours close, you want to bust it like this. Bust it, just bust it. Then go over to your 15 minutes if you're using the 4 hours. On 15 minutes, for this 4-hour candle, when the 4-hour candle close bullish, it may not give you a chart pattern on 4 hours. But on 15 minutes, it will look like this, because 15 minutes has a lot of candles to complete. It look like this on this particular box here. And it will look like this on 15 minutes. Inside this box here, that is when the market will tell you if it wants to continue down or if it wants to continue up. If this market wants to continue down, what it will do is that it will violate this particular box here and come below it like this, come below it and start going down. That is why I said always wait for the second leg. Don't trade the first leg. Always wait for the second leg. This is the second leg here. When the 4-hour candle or the daily candle close, it will not look like this. On the opening of another candle, and if this guy wants to start going up, on the opening of another candle, it will look like this on 4 hours, something like this. The market will just come down, try to pull up again, come down, and failed. Come and close now above it. So this is what you will see on 4 hours. So, and this has to do with the trend, direction of the trend? Where is the direction of the trend? Up trend. Where are we trading? We are trading the pullback. So now all this pullback, if you can come and bust it and just you can, I will show you, don't worry, I will show you. I'm just telling you how to do it. You can bust it, and once you bust it, you can now go back to your, if you're watching for 15 minutes or from 4 daily, you can bust it and go back to your 4 hour and watch how the market has reacted to the. So now if all this thing as if you've got the direction, which is this particular zone here, when you bust it, you now have to wait for the daily, because when you're watching this on daily, when the market is coming, the market will be doing like this. The market will be doing like this, coming down like this. So when the market wants to change, the market has to now give you this confirmation and come and break above this particular high here. So that is why I said you have to wait for daily. Daily is up, 4 hour is coming down, but you have to wait for this alignment for him to, for this guy to start pointing up. When this guy now break above here on that box, that is when you know that 4 hours has also pointed up. 4 hours now is also pointing up. Then you switch to over to your 1 hour. 1 hour will be giving you this kind of formation. 1 hour will be giving you this kind of formation. This is what 1 hour will be giving you. This is what 1 hour will be giving you, because there are a lot of candle here to form. So exactly, this guy now is no longer in a bearish form, because this guy has now flipped from bearish to bullish. So when seeing this, you see this on 4 hours, see this on 1 hour, and currently we are on daily. This is our daily, this is our 4 hour, this is our 1. Once you've spotted all these particular things, you want to sum it up, and that is when you will now have to take your trade. You can take your trade on 1 hour, you can take it on. So have you seen how important strategy? You may not know the effectiveness of this strategy, but once I show you now on a plane on a USD chart, and you also go and backtest it on your own, you will know how effective and strong this strategy. Now let me head over to a chart of GBP USD so that I can show you. You can see that I have also been using this particular GBP USD. I have also been using this particular DC to trade. You can see I call it DC here, DC here. All this candle here are daily close. Look at when this candle, let me zoom this out. Look at this bearish candle here. The moment this bearish candle close, I bought it. Eh? This is a bearish candle. You have to bust from the open of the candle to the close with the wick. You have to bust it. So now let me circle this thing and let's go over to 4 hours. For me now to show this is the first circle with this is the first one. Let's now go to see what the market was on 4 hours. H4. H4. 4 is okay. Enter. Okay. Now look at the first. You can see that the market is coming. The market was just coming down, and all of a sudden, the market came down here, pull back, came. You remember when I said that you need to wait for the second leg inside this box? Look at the second leg came inside this box. We don't trade the first one. The first one can be used as a pap to tap up loss. We don't trade the first leg. The second leg is where we are always interested in. Look at when the market got here, the market now pull up again. And this is where I always enter my first position. Like I said, I always enter my first position somewhere here. The moment the candle close, and I enter the second one at the pullback. This is where I will also enter my second position at the pullback. Now look at this. Come again and look at the second daily close. This is another close. Look at how the market was. The market came down here. Give you this first leg. Okay, this one is the first leg. Came below this particular one, close, but later rallied back up again and close above this particular high here. And close above this particular high. Ideally, this is where I will get in my first position. The moment the candle close above this particular high here, the market did what? Close. The market now come back with retest and shoot up again. Let's go back to the third day here. Look at the third day again. Inside the same boss, the market also came down here, move up again, came back again, and shoot up. So let's go back to daily for you to see that this strategy is one of the best strategies you can use. You can use if you apply them properly and if you know when the candle closes. Note, for you to use this strategy, must be in line, and you must also wait for a daily candle close. Wherever the candle closes, you have to mark it. Let's assume that this candle closes here. You have to bust it and create another bust now from where the candle starts and where it closes. Then that inside here now, then the market will have to give you a confirmation if it wants to continue going down or if it wants to continue going up. So this is what I have for you guys. I hope you just go and backtest this particular strategy, backtest it, check it on different pairs. I give this first strategy to one of my friends, and he has been using it. Currently today, he's thinking today that it's because of me that he was making some crazy amount of money in the market. Because he's using it on the reef and he's working on the reef, he's working everywhere, both on the reef, both anything tradable. So you can use this strategy on any instrument at all. So this is what I have for you guys. If you like my video, if you like the way I teach, please give me a thumbs up. And if you feel that I have done nothing, so give me a dislike, but please tell me in the comment box below what to do in my next video. As you know that no one knows it all, we are all here to learn. I'm here to learn, you are here to learn, until we attain the level which I call the CPT, consistent profit trader. That is where I'm going, and I know a lot of traders are not yet there. Please subscribe to my YouTube channel and give me a thumbs up. I will come your way again when I have a new update like to share with you guys, and keep keeping and peace out. Always remain peaceful and bye.